What's going on, guys? Welcome back to Let It Grow Investing. I am Jeff, and thank you as always for being here. We've got man, a ton of information to get caught up on this week. And yeah, first up, I did want to say thank you guys for getting your votes in for the Let It Grow Investing Challenge for week 46. We did have 5 new names for the investing challenge. I can having a hard time hearing myself. I'm not too sure why that is, but we're going to try to get through it here. So yeah, we were looking at UPS, we were looking at AMD, CrowdStrike, Eli Lilly, and then MicroStrategy. Those were the 5 names for this week. And hopefully you guys can hear me all right. I'm going to try to turn the volume up. I think that might be a little bit better. So yeah, we've got 5 names we were looking at. We were looking at UPS as their earnings were pretty solid. They still trended down after the first initial pop. We got a lot of cooling back down to the low 130 level. I think we're like 132 right now. AMD, for all things AI, for the fact that they're still a big competitor to NVIDIA, and I think that they're going to try to really throw in some challenges for NVIDIA in that race to AI superpower. So we're looking at them for that. We're looking at CrowdStrike after the fact of all the shutdown problems that they had in the market and everything that was going on out there, the things with Delta, everyone was out for like a day. Delta said that they were out for 3 days. They didn't know where their employees were. They were having a huge problem there. It looks like a lot of those lawsuits are going to be solved out of court or settled some way, somehow. And I don't have all the information on that, but it looks like that is the plan right now as to what's going to happen going forward for CrowdStrike. So that one I thought could be a good turnaround play. Still a great security company in the space, and potentially one that could run away with the lion's share of that market. Eli Lilly, some of their results from their latest earnings report were less than ideal. Some of their GLP-1s and diabetes medications did not sell as much as they thought they were going to. They do have some competition with Novo Nordisk, and then all the other players that are coming into the market, whether it's AstraZeneca, or I think Pfizer's trying to come out with something, or we've been talking about Viking Therapeutics. That has been another new competitor that is trying to break into the space. And then MicroStrategy, right? For the fact that Bitcoin has been rallying. And we were looking at that last week. And man, after the Trump election, Bitcoin has really taken off. So we're going to take a look at why that might be. And but first up, I did want to say that we will be buying, or I will be buying $200 worth of UPS tomorrow on the 11th. I'm recording this on the 10th. So I'll be adding to that UPS position. I'm happy to do so. I think that position is a solid dividend player. And the fact that we've had some sell-off in the stock, but the earnings have been looking pretty decent. The economy looks like it's still strong. We're going into the holiday season, which is kind of notoriously stronger for UPS. Their volumes are up, and they tend to trade higher into that season. So for a lot of different reasons, I think that UPS could be a good purchase right now, at least for my portfolio. Do your own due diligence. This is not advice as to what you should do, but what I'm seeing in the market. So definitely do your own homework or consult with your financial advisor or however you invest. So yeah, $200 into UPS for week 46. I've got a couple names here for week 47. It was very tough. It was very, very tough to find names in this market that did not rally that I think have a chance to go up from here after what has been a just insane week on the market. So I did want to go ahead and share up the S&P 500. Let's go ahead and see if we can't share this page here. I'm going to pull up the S&P, and cool. Hopefully that one is loaded for you guys. So yeah, it's been a bit of a crazy year, right? We started down here in the 4,600 range, and now we are right around 6,000. So just crazy gains here over the course of the year. And I don't know, a lot of people calling for this thing to get to 62, 6,300 by the end of calendar year 2024. Certainly possible. which makes it really hard to pick a stock that is not overvalued or just trending higher on a lot of momentum that is in the market right now. So that is a lot of the reason why it is really tough to pick a single stock to gain exposure into this market. So that is a lot of the problem I've been having is where can we invest and be on the political spectrum where it actually is going to help us with Trump getting into office that hasn't already run, as we see after the course of this year, how things have been trending, hasn't already run up and still has some room to go and is in favor of the political backdrop that is going on with all things in the economy kind of boiled down into one play. So buying into an ETF for me is a little tricky right now. I think the IWM, the Russell 2000, I think there are still some moves to be made there. Some of those were some of the biggest gainers on Wednesday and Thursday. We also had Fed rate cuts, which is such a back burner topic right now. That was just overlooked by so many people. If you were paying attention to election news and what Bitcoin's doing, what Tesla's doing, the Fed rate cuts were not even of a concern. So 25 basis points of cuts there, but the bond market is still surging. We're still looking at a market that is really anticipating the economy still being strong. So a lot of things to contend on that front. So like I said, it's just really, really tough to get that perfect single stock to buy with everything that is going on right now. So, yeah, we did want to talk about Bitcoin, right? Let's take a look and share this tab real quick. I'm going to go back over here. Okay, I'm good. All right, so we've got Bitcoin just surging, right? We're above $80,000 now for one Bitcoin. Man, I was talking to someone probably 3-4 weeks ago, and they said, man, I missed it. I missed Bitcoin. I said, I don't know about that. I think, long term, you're still good. You're still in that bull cycle. We still have that, that timeline where we're going to be running up. The volumes were still heavily weighted towards money managers and big commercial investors and not so much the retail trader, right? We had a new high, or we met that 66,000 high on 25% of the volume that we had previously when we met it. So we didn't have all the retail buyers back. So now that we're seeing a Trump election where I'm reading this on CNN, Bitcoin hits $80,000. Why Trump is boosting it? Well, if you remember, a while back, they are saying we're in this greed-driven market. I think that's definitely true. So I am kind of positioning for some pullback, and hopefully a couple different plays go in my favor. But why Trump is boosting crypto, right? He didn't always think that it was fair play. He thought there was a lot of scams and frauds and things like that out there, and there were, right? We've seen all the different crypto exchanges that have gotten hit with all the different problems, people losing their money, losing their crypto, not having their coins, not having their keys, so they didn't know how to access it. There was tons of different problems out there. Well, now people think that the regulation is going to be so that Trump is actually going to boost cryptocurrency. Well, one thing I did not know in this play is that, where is it? This is the interesting thing here. Is a big reason that Trump changed his tune on crypto. He now has a financial stake in it. In September, Trump and his children started a new crypto business called World Liberty Financial. So the thought is that if he's going to be in power, right, that he's going to make the regulations such in favor of getting into crypto, or really cracking down on those bad actors and making it a fair play for the exchanges that actually take care of their customers. And that is a big thing that we have had a problem with in the past. That's why a lot of people are on cold storage, cold wallets, where people, they have their coins. They aren't on an exchange. They aren't staked for those rewards. You're simply just holding onto the coins, and you're holding onto them for long term. And you're not at someone else's discretion of what marketplace they're actually held on. So the fact that he is now in power or going to be president-elect, however you want to call it, the fact that he is into crypto at this point, and a lot of different things are running up this price of Bitcoin. I definitely think that MicroStrategy was a fantastic pick last week. I was watching the crypto space run, but now I think that MicroStrategy still has good way higher, right? I forget about the amount of billions of dollars that MicroStrat has in Bitcoin holdings, but it is a very, very high number. So I am definitely bullish on that one. I still think that there is some more gains to be had as we still get into the Trump presidency. We're still in that bull cycle of where crypto and Bitcoin is, and I still believe that has a bright path higher. Right, Eli Lilly. Man, I still think that one, and I'm trying to kind of backtracking here, but I still think Eli Lilly is going to be undervalued. I do believe that a lot of their drugs and their pipeline is still very, very strong. I'm going to try to pull up their chart real quick, and then I'll swap the screen again. Let's see if we can't pull that up. I still believe that this one has a good amount of upside. So I could still see adding to that one. CrowdStrike, I don't know. That one might have got away from us a little bit. AMD, I still think is a long-term buy and hold. But UPS, I'm comfortable buying that and getting that 4.5%, 5% dividend on those shares as well. I am trying to get this thing loaded here, guys. There we go. Eli Lilly, we're sitting at 832. Dividends, nothing. PE's high. Earnings are pretty sound at 9.25. Beta's fairly low. Novo Nordisk eased investors' concerns. That was one where Eli Lilly posted up some not so great results, and then Novo came out and actually had decent results. So a lot of the same drugs, a lot of overlap there between their blockbuster drugs, and Novo Nordisk was not really looking at the same set of problems that Eli Lilly was. But I do believe that Eli Lilly can turn this thing around. So still around 26% of upside there. So we covered Bitcoin. We covered a lot of these stocks from last week. I do want to look at Tesla, right? Tesla is an interesting one for the fact that we ran like 35% just this week. It's mind-blowing, right? It is really, really mind-blowing as to how quick Tesla ran up. Now, if you're paying attention to the election, you see that Elon Musk is very vocal on supporting Trump right now. A lot of the different things with illegal immigrants and all, he's saying that every state was basically going to turn into California if Trump was not elected, with the homeless problems, with the migrant problems, with all those different issues that California might or might not have, depending on what your stance is on that. He was basically saying that's how the whole country is going to be if we don't get this under control, and basically said this is our last chance. If we had another 4 years of the Biden kind of policies, it would just be overrun by the end of that 4 years, and there would be nothing that we can do to get everyone out at that point in time. So Elon is kind of getting into the point where he's talking about a lot of government efficiencies, a lot of things that he can do to really reduce the amount of spending that the U.S. has paid in a lot of inefficiencies and overspending on X, Y, or Z. And the fact of the matter is, a lot of people are pointing to the fact that he could have some sort of advisory role to Trump in this manner, right? So they're thinking that EVs could be pushed a little bit higher, regulation could be a little bit less for Elon, for Tesla, and some other different regulation type factors that are going to be easier on their business going forward. So I think this one's a little bit overdone. I'm going to be completely honest. I do have a little bit of a bias here, as I do have a covered call written at 300. That means that I would sell my 100 share block of Tesla stock at $300 per share, which when I wrote it at 250, it was about $50 higher. And I thought there's no way in a month and a half that Tesla's really going to run that high. And this was safe. It was easy money. And now if I sell it, I'm in the hole around $2,100. I'm still selling it for where I agreed to sell it, but to get out of it, I could buy the opposite options call but that was at a heavier premium, right? Instead of that $2,100, I would be buying back that option for like $2,700. So I'm going to let it ride. I believe it was the 20th. I think that's when the expiration was. It might have been whatever that Friday is. I don't have my calendar in front of me. I could pull it up, but I don't want to navigate away. Anyhow, so if Tesla doesn't cool, I'm going to be selling, 100 shares of Tesla, which is not the end of the world. I do believe that this thing's going to cool back down. There are some inventory concerns on the Cybertruck. Apparently, you can order a Cybertruck and get the truck within like a couple weeks right now, which is interesting from where we came from and how delayed they were, how long it took to get them. And now it seems like you can just have it, by next weekend or certainly by Christmas. So that is one concern. They're not, the demand is not there as much as the production that they were looking to be able to push out. We do have some other changes with the Model Y. The Model Y is getting revamped. We are starting to see some leaked images. I believe those were out of China. Similar transformation compared to the Model 3, right? The Model 3 Highland gave you a couple different things, screen in the back, different appearance, slimmer lights, couple different things that made the vehicle more comfortable and more user-friendly overall. You're getting the same thing in the Y. And that's going to still be at a slightly increased price, but typical model year newer, 2% or whatever it was. So I'm interested to see what happens for their bestseller, the Model Y, as it rolls into 2025. I think that is going to do huge things, more so than the Cybertruck. I do also believe that the Robotaxi should also be up against a little bit less scrutiny under a Trump presidency with Elon at the helm. I do believe that should help kind of spur that forward as well. So a lot of different things. I think long term, I still believe in Tesla. I think right now it is overvalued. I would simply not buy this chart. Right, we're looking at this chart that was 225 up to 260, wherever this is, we opened at 256. The high was 269 on the 25th. And then we dropped back down, right? We were down at that 250 level. I probably wrote a covered call somewhere in here, betting that it wasn't going to get to 300 by the end of November, and it ran right through that. So again, I think that we settle back down somewhere in the 270 range, 260 range. Maybe that would be where I would buy back in. Should I go ahead and actually sell the shares at 300 if it does stay above that price point for the next couple weeks? And then I would go ahead and try to buy back in somewhere, in that 270-ish range. So a lot of people have been asking, how or what's the play when a stock like Tesla or something like a Palantir, when that runs or when it drops, when do I want to buy more? When do you want to sell or run for the hills? I think with something like a Palantir, right, which had a absolutely phenomenal earnings, and again, something else that I'm probably going to be selling some shares on. I don't think this is going back down to 40 at this point. So I think I have a covered call that's going to expire in December or later November. That is going to put me into selling 100 shares of that. And if you look at this chart, I wrote this covered call somewhere back in the $20 range for a double at 40. And now we're at 58 after this earnings. It is just insane the amount of gains that Palantir has put up. The fact that they're in the S&P 500, all the different contracts that they're securing, all the different product that they are really locking into. On a lot of these customers are adding more and more product. So the sales are just through the roof. And I heard something that, how did it go? It was something along the lines that NVIDIA makes the asphalt that makes the roads, but Palantir is the roads of AI. So without the roads, AI is not going to be done, and Palantir is going to be that in between the users and actually being able to access what is out there for AI. So I still believe that Palantir is a huge player going forward. I don't think that this is done. I think this will be a $1 trillion company. I think it's a matter of time, not if. It's more of a when. I don't even know what our market cap is right now. 133 billion. I still think that this could be a 7 to 10x play in the next 10 years. I really do. Yes, the PE is scary. Software as a service companies do have that higher PE. That is a little bit scarier. I'm not looking to buy into this one right now. The run has just been too massive for me to go ahead and purchase, right? So there's a lot of stocks that are out there that have simply just done too well too quickly. And I don't think that they have staying power forever, right? I don't think that they won't come back down to a place where I would like to buy them. So I am going to hold tight on these. But if you are a long-term investor, back to my original thought, if you're buying $100 worth of Palantir a week, or if you're buying $100 worth of Tesla a week, when do you want to buy more? Well, the rule that I like to look at is if it goes down, if the stock price goes underneath 20% of its previous all-time high. So if Tesla was at 200, if it drops below 160, you would double that down, right? You would go from your, what did I just say, $200 or $100 a week, you would double that and buy $200 a week or a month, right? Until it gets up above 20, within 20% of its all-time high. So if it goes above 160, I would probably start slowing back down my buying to my regular average purchase, amount, right? So I'd go back down to the $100. But if it stays below that 20% lower than the all-time high, I would double it and try to add more at that discount. This is a great idea for stocks that you have that really, really high conviction in. This might not be for the ones that are a falling knife that you don't know where they're going to go, or ones that you're trying to trade, but ones that you're trying to build a position in. So the ones that you're really comfortable in, not simply just I'm trying to swing trade this. I want to just add more and catch this falling knife while the prices are low. But some of the volatile stocks like a Palantir or like a Tesla, I think you can do this very well and go ahead and purchase a larger amount when they're in that period of weakness. And that will happen, right? So on Palantir at 58.39, we'd be looking at a price of 1060, 1160, cheaper than here. So $46, something like that. Below 46, I would start to buy more of Palantir at this current, point. So I'm looking at that as where would I want to actually start to add more Palantir or more Tesla. That's probably at the point where I would even be adding. I'm not currently adding to really either of these positions after this crazy run. But that's how my portfolio is set up. I have more than 10 stocks in my portfolio, and I try to find the one that is worth buying out of the 50 different companies that I hold, which is truthfully probably too many. I'd like to see a portfolio with like 4 to 5% market weight in any one name. So you could probably do about 20 different stocks. For some reason, mine just kind of keeps growing, and I am trying to trade out of a couple of them to close those down to really put that money into higher conviction names. But that's what I've got right now. That's my burden. That's my cross to carry, whatever you want to call it, on my individual portfolio. We talked Bitcoin, Tesla, Palantir, the S&P. We talked rate cuts. Man, guys, there are just so many names this week that have really rallied. A lot of them that didn't are in the green space. I saw a lot of Enphase, First Solar. Those were getting destroyed on a lot of things that were going on out there. Let me just make sure we're still recording. Yeah, we're still good. We were looking at Enphase. Man, this is a painful one. For a lot of the money that Tesla was making me, Enphase was costing me. So it's a lot of give and take out there. I think this chart does it all. Last 6 months, we were at 132, and now we're at $67. That's painful. And part of me wants to follow my gut on this one and start buying this one. It's well below that 20% threshold. I just don't know that I want to catch this falling knife yet. I don't know that it's done. So for that standpoint, it is very difficult to hold your breath and just buy it. Yeah, I don't know where this thing goes. I really don't. Well, what's going on, guys? Jeff here with Let It Grow Investing, and I wanted to tell you guys a little bit about First Form. First Form is a supplement company that I've been using for a long time, and they'll definitely help you get on your path to your fitness freedom and your the goals that you have for building a better you. So that whether that's building muscle, cutting weight, whether it's hair, skin, nails, anything else that you're trying to really improve on yourself, get yourself in shape. For longevity, for peace of mind, for cognitive support. They've got a product for pretty much all of it. And it's some of the best products that I've used. I've tried everything over the years, and I keep coming back to First Form because it works. So if you want to help me out, help support the podcast, you can go over to firstform.com. That's 1stphorm.com/let it grow and check out some product and, see what can help get you on your way to those fitness goals that you've got set for yourself as well. So again, be sure to use my link, Let It Grow, at firstform.com. So we had a little bit of a audio concern going on right there, but hopefully this is going to get that straight. We've got problems with Enphase, as I was talking about, but we were looking at First Solar. First Solar looked a lot better than where we were looking on Enphase. We didn't get a lot of the negative talk, a lot of the down guidance out of First Solar that we have gotten out of Enphase at this point in time. So I do believe that they are a little bit safer, although still a bit problematic. So yeah, going forward, as I was talking about that one, let's see if I can't pull it up and just get back over to where I was previously. I lost about 25 minutes of audio. The video was fine. If someone knows why that is, feel free to shoot me a message. First Solar went down, about 1.5 compared to, Enphase just getting obliterated. We got that. And then I went ahead and went right into the investing challenge for week 47. And I was still looking at one name that I was watching a while ago, the Dutch company ASML. We're at 670 average price targets up near 919 if I recall correctly, 917, and that should give us around 37% upside here on this semiconductor play. And I still believe that they had a rough earnings there. The guidance wasn't too great, but I do believe that they can get back to where they were and get back on top of that space. So ASML is going to be stock number one. And again, these were very difficult to narrow down which names we really had any value left in at this point in time. We're not going to want to chase the market. We want to have these stocks be in our buy price range. So this is the ones that I came up with. If you guys got other options, other thoughts, feel free to share them up. I'd like to know what you guys are buying as well. Number two was going to be Next Era Energy. Next Era was traded down on some of the fact that, Trump might not be the greenest, green supporter out there. I don't think that he's against the technology or against solar. I know I listened to him talk on, I believe, Rogan, and he said, windmills aren't really all that clean. You've got to maintain them. You've got to deal with them. There's a bird graveyard underneath these things. They're loud, they're noisy, they're all these different things. They're hard to dispose of. A lot of different issues with windmills. So that wasn't really something that he was in favor of, which I believe Next Era does some of. And the fact that the market has sold this one off from a high of 86 down to 76. I don't know that people are simply just going to get away from Next Era because of the fact of, Trump being in presidency. So I think that Next Era should be a good investment. Their compound annual growth rate was in the mid-teens. I want to say it was around 15% over the past 5 years. They have been outperforming a lot of the other utilities. They're into that solar, into the green. They're into the windmills, I believe. They might not be in the sweet spot for a Trump presidency, but I think they have been oversold for what they are at this given point in time. So Next Era, NEE, is going to be my second pick for week 47. Number three, we are looking at Civitas Resources, oil and gas. They're going to be in the Permian Basin. They're going to be in the Denver Julesburg Basin. I think there's something in the Delaware as well. Let me get over to that. We got around 41.5% of upside on ticker CIVI. Super low PE at 5.28. Beta is really low. Earnings are solid. Quarterly dividends almost at 4%. They do a lot of special dividends as well. So you'll often see this one with a 9 or 10% dividend payer. Their typical, kind of predictable dividend is around 3.75%. But with that special dividend, it takes it up much higher. It just depends on the amount of sales and production that they're able to do in order to sell this off. So we've got what was I saying about this one? Oh yeah, that's what I was looking at. They're in the Denver, Julesburg, the Permian Basin, and the Delaware and Midland basins. So we've got 453,000 acres in the DJ Basin and 68,500 acres in the Permian. They're making about 280,000 barrels of oil equivalent. So again, I think the fact that Trump wants to drill, they want to have more oil here. We are fighting lower gas prices right now as OPEC has really been overproducing and they really haven't been cutting back on supply. So we have not seen that done typically. I do believe that will change as Trump gets back in, and we're going to have these talks about, hey, we've got to, stop flooding the market with cheap oil. And I think that is going to be something that will be addressed early on. So Civitas, CIVI is number 3 for week 47. Number 4, we're looking at Snowflake. And if you are, into Palantir, a lot of people are saying that Snowflake could be a good investment as well. They're going to be reporting earnings on the 20th. That's what we're looking at right here. We are getting some upgrades. Snowflake is a stock before earnings, is a buy before earnings. Analysts say just look at Palantir. So a lot of the same things in data and cloud AI. And I do believe that Snowflake should start to take off from here. They are another company that's going to be valued kind of crazy as a lot of these software, cloud, and AI businesses are. So sometimes you might think that it's overvalued, but I do believe that we have a good amount of upside going forward. In the path going forward is one that I'm pretty comfortable in buying here. So we've got a good amount of upside. I believe it was 38.5%. Let's take a look. Yeah, 38.5. Very little on that downside. We are much closer to the yearly low. That yearly low, if we get back over here, was I believe 10. Let's take a look. I don't want to get it wrong. 107. So we're at 121. That yearly high was set back in February at 237. So this thing has been punished for long enough. I think a lot of these earnings that are coming out have been strong. If Palantir can do it, why can't Snowflake? Hopefully we start to see that becoming a trend going forward, that a lot of these are trading kind of at the same, same kind of results as we often see in other industries. And I do believe that Snowflake should get a nice bump up coming off of some of these lows after building in such a nice base at that 107 level and kind of trending forward off of this low cycle that they've had. Number 5 was going to be Datadog, DDOG. And again, this company is in your cloud and software as a service, security and observability. Basically, you can see all your company security all through one stack in Datadog, your account there. So Datadog, again, one that should have some bright spots going forward. We had a lot of earnings of buys coming out after earnings, right? From Rosenblatt, from Barclays, from Citigroup, from TD Cowen, from DA Davidson. A lot of people saying that this thing is much stronger than what these numbers are showing. So we did have this thing at 130. We're probably up in the 130 range. And then actually after earnings, we had this drop back down sub 125, right? We're at 124.40 in extended hours from Friday. So there's a lot of talk as to what's going on here. So when you start digging into what caused this thing to go down, you'll start seeing a little bit more of what the actual story is. We've got this article here from Barron's or Dow Jones. And here we go. We got earnings per share of 46 cents. We were looking at 40 cents. So we beat that. Quarterly revenue rose 26% from a year earlier to 690 million, while the consensus was for 665. So we outdid the revenues by 25 million. Okay, so that's not enough. We had the stock go down on Thursday. It started in the negatives, ended up 1.7%. The forward looking was nothing to write home about. This is where we get into the weeds about what Datadog did and where they're going, right? We were looking for 665 million this last quarter. We came in at 690. Now they are calling for a range of 709 million to 713 million. So that midpoint is $711 million. Wall Street was looking at $712 million. So we're lower by 1 million at that midpoint of what Datadog is expecting. I don't think that is a reason to have a big sell-off, right? I don't think we need to go and jump ship for the fact of coming in maybe $1 million light when it's still what 35 $46 million higher than this past quarter. Really, we're gonna sell this one off because they just had a rise of 26% year over year. And now we're going from what they thought was going to be 665 million to 711 million, but not 712. So we're going to punish this thing. I think that is just madness. I don't understand why we're going to just toss this one, and get rid of it over the fact of a $46 million gain quarter over quarter. Doesn't make sense to me. So I want to buy this weakness knowing that the quarter wasn't as bad. The guidance is, they say that, the guidance was nothing to write home about. Maybe it was slightly less than what we thought of, but this company is still growing at a really solid clip. And it's one that I feel comfortable buying with this kind of news behind it, coming off of a strong quarter and still posting very solid gains going forward. And maybe they outperform. Maybe they even underperform, but I don't know that they're going to, right? They beat before. I think that they're going to continue to beat. And maybe it's just one that's kind of getting beat up a little too hard with the week that we're up against. Maybe it's from the fact that, Fed is cutting and the bond market's going higher, and a lot of people are really trying to figure out which stock to buy. Do we just go all in on Tesla, or do we look at some of these main players? Do we not want to be buying something that might be a little bit riskier? But then you look at all these analyst expectations, and they're all new buy targets, right? We're getting all this new information with solid news, and we're still selling it off. So I'm thinking that Datadog could be a good purchase right here. We've got 12 strong buys, 27 buys, 3 holds, 0 sells, 0 strong sells. And yet people are selling this one off after all this good news. 149 buy, 148, 165, 156, 155, 160, 150, 2 holds from KeyBank and JMP with no price target. Barclays at 155. I'm comfortable buying this one is what I'm saying. I don't have such a deep following with Snowflake or with Datadog or even with ASML. I don't have those. I hold NextEra. I hold Civitas. I follow those. I don't follow these other ones, but I can tell you that Datadog should not have been sold off simply because of a projection of maybe $1 million light on revenue, although their earnings per share for next quarter is going to outpace what the market was anticipating. I wanted to get back to that. I didn't want to get back to that article. I wanted back to this earning beat article. let's get this one back pulled up. We've got, sorry, I just probably should have stayed on that one. We had earnings are looking to be 42 to 44 cents, and Wall Street is expecting adjusted earnings of 40 cents, right? So we're still beating on adjusted earnings potentially by 5 to 10%, and we're still going to sell this thing off. I don't agree. I think it's one that could be bought here. I think a lot of different analysts agree with me. And again, I think it's an overreaction from Wall Street. So that's what I got. That's the 5 that I came up with. ASML, Next Era Energy, Civitas, Snowflake, and Datadog. So get over there to Let It Grow Investing on Facebook, on Spotify, on YouTube. Get your votes in. Let me know what you're thinking about these 5. Let me know what you're thinking about the election. And then potentially what other names are out there that we can still buy at this point in time to make some money in these portfolios. Hopefully, regardless of what side of the aisle you're on, the market has been your friend this week. It is very tough to not have a green week unless you are in strictly those renewable energy solar stocks. They have been rough, but there have been a lot that have really rallied. We've seen SOFI, Palantir, we've seen Caterpillar, and all those different names really boom up higher. So yeah, thank you guys for stopping by. Hopefully your market, your portfolio is thriving through this market. Hopefully these names give you a couple pointers as to maybe where you can look in your portfolio to find something that is worth buying right now, that isn't overvalued or isn't going to get crushed by a Trump presidency. And hopefully we can get out there and make some money together, regardless of what side of the aisle we're on. Hopefully we can get some clarity and go forward from here. So thank you guys very much for stopping by. I will catch you in the next. Go ahead and take care.